Hey, welcome back, everybody. Welcome back to the Passive Money Plan. Alex, we've been talking here at nauseum that we was hoping the stock market crash so we could take advantage of the opportunity. So, with the election done, Fed cut rates again. Donald Trump's in office. Come January 20th, I believe that's the date he had officially take the scene. Bitcoin's at close to 80,000. Uh, Nasdaq, S&P 500 is at all-time highs. What you gonna do now? Are you gonna sit on the sidelines? What you gonna do with your cash hoarders you had sitting around waiting for a correction in the stock market?
So on a couple of the pullbacks, I was buying up shares, and there's still opportunity in some shares that are or in some stocks that are currently down. Right now, I mean, it was never for me, it was holding cash on the sidelines in case there was a pullback. I would rather get the majority of my stake in a cheaper price than in a higher price. So my ultimate goal for everyone that's watching was to get to regain that 100 shares that I had of either the Nasdaq or the S&P 500, something that would allow me to sell 0-day options. Right now, it's I was purchasing the Nasdaq, not so much the S&P, and the Nasdaq more so because of, I mean, it just grows at a faster rate, and the volatility allows for it to make up to the same premium that you would on the S&P 500, um, even though it's a cheaper price than the S&P 500. So, and also at the same time with the Nasdaq, it's a cheaper entry price to get into 100 shares. So with the S&P 500 sitting at about 597, the Nasdaq is at about 514. So in a 100 share scenario, that's about $8,300 in difference. Um, so I mean, I'm still gonna go for the 100 shares. I was just holding back in case there was going to be some huge downfall or something. But it's just acquiring shares. It's just, little at a time. I'm not gonna stop acquiring shares, but at the same time, I mean, you and I both saw the benefits of, still being invested in the stock market, like we actually talked about a couple weeks ago or so. So, I mean, still being invested in the stock market, we saw growth in, the days after the election. So I'm not, I don't feel defeated. I would have liked for a pullback, but, it's still just about, getting the 100 shares just so I can get that extra income on my books.
For the people out there listening, when he's saying the S&P 500 and the Nasdaq, he's talking about the ETFs, the ETF SPY, and for Nasdaq, he's talking about the QQQs. Just so you know what he's talking
Oh,
about. But
okay.
that's what he's buying positions in and selling options over the top of them. Uh, yeah, I mean that's why we talked about you know don't time the market, i.e., don't sell shares and be like, oh, I'm just gonna sell all my positions and then when the market comes down, I'll buy it back. No, stay invested and then keep on stacking cash. Stack cash either via selling options, stack cash via, hey, you got a job and you still putting money to the sidelines, waiting for a correction to happen. You're just not investing it all at that moment. It's if you got rental properties, taking the rental income and setting to the side to take advantage of the next collapse on either side, the real estate market or the stock market side. But don't sell. That's like a real estate investor saying, "Oh yeah, I'm about to sell all my houses now, and I'm gonna wait for all the prices to come down, and I'm gonna buy them all back then." It's crazy. You stay invested. You stay
Yeah.
invested. So because we don't know what's gonna happen. Like we didn't know which way the election was gonna go. I mean, we had hopes of one way, but if it don't happen, it don't happen. So we saw the night of the election, it showed that Trump had a sizable lead for the presidency, and the stock market went up. Dow Jones was up like 800 points the first time I looked at it. Then I believe it ended up like 1,400 points. But because we still invested, time in the market is better than timing the market. Since we're still invested, we're still benefit from that. So are we 100% in? No. But we're 100% in from the money that we already had in. It's just the money we had on the sideline just didn't get exercised. We didn't put that to work. But as you said, it's still opportunities other places. Maybe the Nasdaq index is not the place where it's opportunity. Maybe you find a stock that's still out of sorts. I mean, I still seen Nike was still down to close to its low from when they reported earnings 2 quarters ago. Things like that. So it's still opportunities out there, still stocks out there that's still in depressed situations where you can take advantage of. But again, you have to do the homework. You can't just sit here and wait for Twitter or wait for CNBC to tell you the next stock to buy after it already ran up 45%. You have to get in there and do the work, look through the conference calls, listen to the conference calls, look at the financials, and break down company if that's what you want to do. But sitting there trying to time the market, buy and selling, thinking that you're doing something, you're really not doing nothing. And for the life of me, and this is something that I noticed, people think when they invested a chunk of money, let's say $10,000, oh, that's it. I ain't got to do nothing else. I just got to wait. How about start setting more money to the side to invest again? Set more money to the side and keep investing. Because the more shares you have of it, let's just say an index, when it goes up, you make more money. But I know it's a lot of people, they be like, oh yeah, I put $10,000 in the market. Then they go back to doing all the brokey people stuff and then just hoping that make them a trillionaire one day. That's not how it works. You keep finding ways to put capital to work. And that's the mother's milk of the market.
Yeah, I mean, so, and I still see the Nasdaq, the QQQ ETF being an opportunity. It's just the way I looked at it is I would rather be prepared than surprised if the market were to have a pullback because we didn't know who was going to win. That's why I kept cash on the sidelines. Because it went up, it doesn't mean that I see, oh man, I just lost out. I feel defeated. It's not a good investment anymore. Because the fact is, it's still 100 shares for, let's say, $51,400 at where it sits now. I know the price is going to fluctuate. That will bring in 1,200 a month, roughly, let's call it close to 15 grand a year off of 50 grand. There's no overhead expenses. So it was just viewing it as another asset in my portfolio. So that's where I'm trying to get back at. I'm looking at 100 shares as an income asset, not as, oh, let me get the best price so that I can get all this appreciation. We both know the QQQ ETF in 5 to 10 years is going to be double what it is now. So, I mean, if we still believe in the American economy and that, all businesses are going to keep growing, we know that the S&P 500, the QQQ, it's going to keep growing and growing and growing. So, I don't feel like, oh well, if I had gotten in at 460 it would have been better than at 500, because in the grand scheme of things, if it's gonna double, triple, quadruple in the future, a $40 difference doesn't make or break the deal. So the biggest thing to me was grabbing that, getting those 100 shares to get the income. But while I had that cash on the sidelines, it was selling weekly puts, every week, selling puts on Disney, selling puts on SoFi, things like that, grabbing income so that my cash isn't just doing nothing, sitting there. I was still making income in the process. So at the same time, you've got to stay operating, because in that case, if I just kept my cash in a bank account, just hoping and praying, oh, please let it come down, then yeah, I would have taken kind of a loss there. But I was making up for the income, and that income that I was making with the puts, is extra supplemental income that I can use towards those shares going into the Nasdaq or the QQQ ETF. So
Cool. Well, we can wrap it up right there. For everybody that don't understand what selling calls and selling puts is, please subscribe to the channel. Comment below. We can dive deeper into those different income aspects if you would like. Please like, subscribe, and share. and we'll see you on the next video.